And we're back for episode 10 of the Cash Flow Corner, along with myself, Aaron Thomas, with my brother, Jacob Thomas.
Yeah, how we doing, Aaron? And how we doing to all those listeners out there tuning in for episode 10 of the Cash Flow Corner? Can't thank you guys enough for the continued support throughout this podcast series and all the content that Aaron and I have been putting out on social media. So big thanks to all the listeners and all the supporters out there before we get today's podcast underway. And I know it just feels really good to get back in the groove of things here, Aaron. I know it's been a couple crazy weeks for us the past couple weeks, and it feels good to get back into Scottsdale, get back in the office, and really just get back into the swing of things here because it's crazy to look up. We're looking at the calendar here, and it's already September, which is crazy to think about. The year's just kind of been flying by, and I know as we progress into the end of the year here, into the fourth quarter, there's a lot of things to keep your eyes on and really just overall feeling a lot of optimism moving forward as we go into the end of the year here. But yeah, just really ready to get to today's conversation and what we want to discuss on today's podcast. But outside that, how are things going on your end? How are you feeling, Aaron?
Yeah, I'm feeling great. Like you mentioned, it was nice to go back to Michigan for a few weeks. And I know whenever we left, it was hotter than when we came back. So that's always a good sign. And yeah, a lot of optimism. I know hopefully, whenever this episode 10 is dropping, hopefully on that Wednesday, there is going to be some rate cuts that we're looking forward to. So I know talking to a lot of sponsors, a lot of investors, everyone's kind of looking forward to that date. So hopefully this podcast is dropping on the right day. And everything else has been going great. I know we've been able to get away for a while, which has been nice to kind of take a breather. But like you mentioned, excited to get back after it and ready for the future ahead. But I'm really excited for today's episode. I know we're going to dive more into why multifamily over other asset classes and other real estate investments. And it's one of our biggest passions. So excited to dive into that. How are you doing?
Yeah, thanks for asking, Aaron. Obviously, I'm doing great, and like you mentioned, we went back to Michigan. What was it for? 2 weeks. It felt like a while, but we went on a golf trip with some of our high school buddies up north Michigan, and we played some really cool courses up there and had a really good time with those guys. And I know we were talking about it. I don't know if it was the last episode or a couple episodes ago when we were talking about the heated golf match between Aaron and I. We happen to be on separate teams. I know Aaron probably he's the one that edits these podcasts, so there's a good chance that maybe he sniffs some of this out, but. Got the better of them up north in the one-on-one match for the final day, and the team Chargers ended up taking it. So shout out to those guys. It was a really good time with them. And then also at the same time too, we had some family up from Tennessee. We had some cousins up that had never been to the big house for a Michigan game. And I know it didn't work out the way we wanted to. Michigan took our first loss and quite some time, but it was really nice to catch up with them and show them around Ann Arbor, show them around the big house. So that felt good to catch up with them too. But yeah, just looking forward to, like I said at the start of the podcast, looking forward to putting our heads back down and getting after things here. And you mentioned something there about what we want to talk about on today's podcast, and something that I don't know if we've gone in depth on, but for those listeners, I'm sure they're a little curious about why Aaron and I chose the niche of multifamily. Why do we look at this asset class? Why do we think this is the best asset class to invest in? So I feel like if we can kind of just start the conversation there, Aaron, I know a lot of people have been asking about, this type of investment, let's say retail or office spaces or multifamily, just trying to be able to sort those things out and being able to establish, I don't know, maybe a good list of like pros and cons versus being able to stack up the multifamily asset class against other asset classes. So I want to start the conversation off here with you, Aaron. I know for you personally, you had a jump start into the world of real estate. I know you've had the opportunity to learn a little more about the ins and outs of multifamily space. So yeah, Aaron, I'll ask you this here just to get this conversation going. If you could just maybe lay out some characteristics of the multifamily asset type and be able to kind of compare and contrast those to some other asset types, I feel like that would be a good spot for us to get this conversation going, and then we'll just kind of take it from there.
Yeah, so for me, like you mentioned, I got a little bit of a head start whenever I jumped into the brokerage route. And really, the biggest thing I first noticed was whenever I got into brokerage, you are able to really pick your role and where you want to focus. I know a lot of people can either go multifamily, industrial, office, medical office, retail. So there is a lot of different asset classes because I know some people may think that commercial real estate is only multifamily apartments or it's only office buildings, but really it's retail spaces, industrial warehouses, apartment complexes, office buildings, medical offices, and it seems pretty broad and they do all have their own characteristics. And really diving into the key multifamily characteristics is what stood out to me is there's a lot more transaction in the apartment space. There's always buyers, there's always sellers, there's more demand for that. So that really stuck out to me, especially from a brokerage side where you're getting more transaction volume. And there's also the key characteristics of just income stability, looking at it from an investor side of there's always that consistent cash flow from rental income. And like I mentioned on a previous episode, people always need a place to live regardless of the economic cycles and the demand resilience, like I just mentioned. There was always an emphasis on multifamily properties because they often perform well in both economic booms and downfalls. So even if there is less vacancy, there is more units to make up that rent. So no matter what, you're going to be able to have steady cash flow, which from an investor side is exactly what you're looking for. And then the other characteristic that I would say sticks out from the multifamily side is there is a high turnover rate in the multifamily apartment spaces because people are always moving in and moving out. Where, let's say, for retail, you may have a longer lease term, but it is harder to get certain companies or tenants into a retail space. So, just being able to have a diversified tenant base in apartments is also another huge focus that investors look at as well.
Okay, so as you were breaking down some of those different asset types and some of the different characteristics, I couldn't help but really start to put my investor hat or investor helmet on. And really, the thoughts or the question I would have for you, Aaron, now is, let's say for somebody that is a new investor, right? You have all of these different options that you just laid out. Do you tend to see a little bit of, I guess, clutter or confusion or hesitant from these investors if they're exposed to all these different opportunities? Also, on top of that, I guess a two-part question here is, if there is that confusion, what are some ways that investors should be able to alleviate some of that confusion and really narrow in the process of which way they want to go in terms of investing?
Yeah, so I know from an investor standpoint, everyone really knows what apartments are, what they do, how they generate income through rents and through other income variables. But ultimately, I know it's always great to diversify your portfolio, but it's great to stick with one niche in terms of understanding the multifamily market and understanding where cap rates are, what interest rates are, because that also comes into terms with lending, which we'll talk about later. But being able to really hone in on one asset class gives you the most advantage because you're then able to, instead of spread yourself so thin across all these different asset classes and these different property types. Once you're able to hone in on one asset class, you can really build up your knowledge through that one asset class, which only helps give you confidence going into deals. Where if you're a multifamily investor and let's say there's a retail property out there and someone's asking you to invest in this retail space, it's always a little bit different. The groundwork and the base framework is the same, but just understanding the tenant base and really how you're going to generate that income is a little bit different from asset class to asset class. So just knowing that and being able to focus on one is always a great point to emphasize whenever you are investing, especially whenever you're starting to invest.
Yeah, no, Aaron, I love that, and that's definitely a question that we've been getting from a lot of different people is, trying to alleviate any of those confusions, any of those second thoughts, whatever that may be. And for me personally, and one thing that I want to touch on of why multifamily and why Aaron and I decide to narrow in on this niche, and it goes back to that idea or the concept that you talked about within multifamily. And the thing I love the most about multifamily is being able to have multiple streams of income being able to generate throughout the property. And the way this is done, you're going to see streams of income. Obviously, you're going to see it through rent, but then there's going to be additional charges. You're going to see different amenity fees, parking fees. The hot thing now, I know Aaron and I have lived in a couple apartments, the trash can service, which I know it's kind of ridiculous. You could, just simply walk down or, go down the stairs and throw out your own trash, but it's something that a lot of these type or these class A and class B properties are starting to introduce into their business plans. So just being able to have those multiple streams of income only helps generate that cash flow. And as you know, Aaron, as we know, cash flow is king. So being able to have those different streams of income is something that I want to harp on and really make a point on.
Yeah. And just following up off that, I guess we can go right into really the comparisons between multifamily and each other asset class. And if we're just starting, we can start with, let's say, retail, where retail has more volatility in terms of it's more highly susceptible to consumer trends and economic or e-commerce growth and economic cycles. Retail also has that tenant dependence, like I mentioned, where if it's a retail shop that only holds one tenant, and let's say that one large tenant leaves, then it can devastate the entire property. You could be out of cash flow for multiple months and be sitting on an empty property. And there is more risk that comes into terms with retail, but there is sometimes higher returns. But that's another reason why we focus on multifamily, because it is that safe, achievable, long term wealth building strategy where you know you're going to get that consistent cash flow, like you mentioned. And also, like I mentioned before, the leasing terms in terms of retail, where retail properties typically have longer leases, but releasing can be more challenging in filling that vacancy. There is risk in all asset classes, but why we focus on multifamily is just eliminating as much risk as we can, just so our investors receive higher returns and those more steadily long term returns.
Yeah, I love how you compared the two, the multifamily in between the retail. And before we move to the next little topic here, I just want to go back to that idea of, and I think it's so prevalent if we take a snapshot of today's economic cycle and where we're at with inflation being so high, the cost of goods being so high. You look at these retail stores right now, that's something where the consumer demand right now is down, but so people can go, let's say, their Starbucks, they can kind of cut back. Let's say they're going 5 days a week. That's something where they can go down to 2 days a week. But when you look at the multifamily aspect of it, what are you going to do? Not live in your apartment for 2 days and give that up? No, that's crazy. You're going to be there. That's the last thing to go where people live. That's always the last thing to go. So yeah, continuing on with the comparison of being able to stack multifamily against some of these different asset types, Aaron, I want to jump in now. I want to be able to take a deeper dive or a deeper look into how multifamily stacks up with office spaces and be able to look at the office space and what those characteristics are and be able to lay out the different pros and cons of how that lines up with the multifamily space. And just to quickly break it down, for the office space, obviously we were hit with some very unprecedented times with the COVID impact in 2020, and a lot of people obviously have been working from home or working remote now. There is a lot less demand for office spaces all throughout the United States of America, no matter what city you're in. So being able to follow those current trends, obviously this could change as we go down the line. People could be getting back into the office, they could be getting back into normal work setting, but just being able to have that broader idea of where that trend is heading and where it's at right now is always important to know. And then also with the office space, those characteristics, you're going to have, like you said, with the retail, you're going to have some of those longer dated leases with those tenants. And then outside of that too, the one point I want to make before I hand it back over to you, Aaron, and you can kind of fill in the blanks here with the office space if you have any thoughts. But I want to talk about the expense allocation and how this plays into the business plan and how this plays into life and the investment when you're talking about the office space compared to multifamily. And really, on average, and what Aaron and I see across the board is office buildings are typically going to have higher operational cost, higher maintenance cost compared to the multifamily properties. But yeah, Aaron, I'll just kind of kick the ball back to you. I don't know if you have any thoughts on the office spaces versus multifamily, or if you want to keep the conversation going. But yeah, I'll kick it back to you.
Yeah, exactly. And really continuing on with those comparisons, I'll jump into multifamily versus industrial. And if you're in the world of commercial real estate, you know that industrial has been very hot over these past few years. And I know it's an asset class that a lot of investors have been looking at. And really, the biggest differences between multifamily and industrial warehouses is there is a large growth in industrial real estate right now, like I mentioned, and there's been a large demand due to e-commerce such as Amazon and really global supply chain shifts that has been increasing the demand in that industrial asset class. And in industrial, there's also lower maintenance costs. Industrial properties generally require less upkeep than multifamily, and they're also less complex and cater to fewer tenants with simpler space needs. And also, in terms of industrial, there is that vacancy risk similar to retail, where industrial properties can have fewer tenants with longer leases, but when vacant, filling these spaces takes much longer compared to multifamily units. So I would say the biggest difference in between industrial and multifamily is really that tenant contract, depending on how long it is. But I know industrial is definitely booming, and it's something where it's actually beating out multifamily right now, but it's also where there is a higher return but higher risk. And like I said before, we're always trying to limit that risk, even though there is a lot of industrial demand right now. And I know a lot of investors have been gaining great returns on those. There is always that uncertainty, but I know a lot of people are really bullish on industrial, in which they should be. It's a great asset class. It's just not the asset class that we're particularly focusing on. I know that there is a little bit less investor knowledge of really industrial, but I know the people that are involved in commercial on a day-to-day basis and have careers in commercial real estate investing, it's definitely an asset class that I know that they are focusing on.
Yeah, so now that we stacked up all the different asset types against the multifamily, you should have a really good picture, a good idea of those different risks that are involved with each, some of the different characteristics that go along with each. And I wanted to take this conversation now, Aaron, to a place that maybe is sometimes forgotten, that people don't think about, or like I said, it kind of tends to go a little forgotten, is being able to, when it comes time to acquire a deal, going through the financing and being able to deal with lenders. When you look at multifamily against some of these other different asset types, it's going to be a lot easier to acquire a loan, only because these banks and these lenders, they definitely view multifamily as a more stable investment, which makes it in turn easier to get those loans, to get deals under contract. So for me, I feel like that goes a little unforgotten. I feel like people find a deal and they automatically assume they can get a loan. They can go to a lender and get a loan on it, and that's not usually how it always plays out or works out. So I feel like that's a big key to mention there, on top of comparing all those asset types against each other.
Yeah, exactly. And that's another huge benefit for multifamily is those lending terms, because like Fannie Mae, Freddie Mac, a lot of the lending companies are more favorable towards multifamily investing, because multifamily is seen as a safer, more conservative investment, especially those that are seeking stable long-term cash flow. And also there is the liquidity aspect of multifamily properties are generally easier to buy and sell due to strong market demand, like I mentioned, especially in growing urban areas, while office and retail properties may take a little bit longer for the transaction process. So, those are some other key aspects and characteristics to note for multifamily investing compared to other asset classes as well.
Perfect. And I'll, as we get towards the end of this episode in our conversation, Aaron, I just want to wrap it up with big why overall of why we view multifamily as best investment for not only us but for other investors as well. Is really what it narrows down for me personally is just kind of summarizing everything that we talked about here. It aligns with our risk, it aligns with our investment philosophy. And on top of that, too, multifamily provides a cash flow driven investment, like I talked about earlier. But overall, what it comes down to is being able to look at these, let's say maybe some new investors or seasoned investors. It's a really good entry point for anybody to start investing in the world of real estate. I feel like that's my big point there. I'll kick it back to you if you have any remarks to kind of wrap us up.
Yeah, so the last thing I would say is almost exactly what you were saying, is that multifamily investments line up exactly with our strategy and what our investors are looking for. And it's just that balanced risk to reward that you mentioned of having that stable long-term cash flow driven investment that I know a lot of investors really look for. And commercial real estate in any asset class, they all have their own unique characteristics, their own merits. But multifamily just stands out to us due to its stability, liquidity, and consistent demand across market cycles. And like you mentioned, it just gets us excited, and it's really what we're passionate about, and it's what a lot of our investors are passionate about, and that's what we love looking for. But I think today was a great episode of really diving into all different asset classes, really understanding the differences between each. And no matter what asset class you are involved in, there's always pros and cons. But just recognizing that risk to reward, like we mentioned, is a huge focus. But I think that's a great place to wrap up for today. And I can't thank the listeners enough for tuning in today again to episode 10. I know we have a lot of good guests that are coming up in our next few episodes. So really looking forward to that. But other than that, I think it's that's a great place to wrap up today.
Yeah, and as always, if you found this helpful, educational, hit that little subscribe button there. Make sure you're following us on all of our social media platforms: Instagram, LinkedIn, YouTube, you name it, we're on there. So keep up the support. We appreciate it, and we'll catch you on the next episode.